So we had a special treat this week with 2 days with a bond auction news event. So let's talk through bond auction protocols for Thursday. So on Thursday, the 11th, we had a bond auction event coming out at 1:01 p.m. So let's take a look at how the bond auction protocol would work on this day. So we start off the day with a very narrow Asian range. We have an 8:30 news event on CPI. So we're looking to see how will price react around the range high and range low created between midnight and 8:30. A CPI is in itself a protocol, and I'll just touch on that briefly, which is it creates a vacuum in price. You're waiting to see some sort of retracement down into a discount level, and then you're looking for a pull up into the vacuum that CPI created. Now, you're not always anticipating that price is going to go much higher than that. A lot of times you're simply allowing yourself to get what you need to get. If there's a runner, you can let it go, but otherwise you just take what you can get. Now the move here between 2 o'clock and that London Open, which will typically drag you down lower, and then you'll see just before the New York Open we're anticipating a run back up. That run back up will come into some form of that discount array leg. So just to be clear, what I'm talking about here is all of that price action prior to the New York Open. So that price action prior to the New York Open, which is at 9:30, is everything in here, which would be the CPI move. There is a small price action move here. Now this normally takes the Asia low, which gives a very clear sign that you want to be bearish. But you can see from this price action on this day, the Asia low wasn't definitively taken. It was closed back above early, I would say, before 7:30. So not for nothing, this is an OTE setup, and so is this one, but we're not focusing on that for this journal entry. We're going to focus on the bond auction protocol. So framing the day, starting off the AM session, we are anticipating a bearish day, at least until around noon or until the lunch hour. So typically how we would look at this is we would say we want to do a process of elimination. Which profile is more likely to be in play going into the PM Silver Bullet? So we take the information from the AM session, we combine it with the lunch macro, and we're preparing ourselves for action in the Silver Bullet. We can see on this day we clearly have an AM down close. So from the 9:30 open, a small peak above going back into the OTE of this range, which is all CPI. That order block is pretty obvious in hindsight. That run goes aggressive down through the AM session. So we've got three profiles that are possible with an AM session AM decline. So we're looking at the 3 AM decline sessions, and typically what we will do is we'll take the range high and range low of the AM. So using our standard lunch protocol, our range high here and our range low, which is just before lunch, would be here. And now we're looking at what the lunch macro does with those range highs and lows. So in this profile, we would see AM high and the AM low, and we're looking for price to clear below the AM low to reverse bullish. Since we don't see the AM low being taken, that profile is out. The next one is AM high, AM low. The AM low is not taken, so we'd be looking for the lunch low to be taken, and then we would consolidate right around that 9:30 price. So that would mean price would be drawing back up to 9:30. So at this point, you can see our lunch high and lunch low. The lunch low is not taken, so that profile would also be out. The third AM decline profile has the AM high, AM low. The AM low is defended. we see price will chew back up towards a discount premium array in the AM leg, and then we will have a 2-session down close. And on the surface of it, this AM high and AM low could tempt you to think that price is going to take that profile. But what we see is that throughout the rest of the session, we do not have any down close. And part of what happened here with all of these small candles until about the silver bullet time frame pushing up into this premium is there was a lot of activity around these premium arrays where people may have been mistaken to think that this was going to be a 2-session down close. So you can see 50% is here of this AM leg, and anybody trying to do shorts on something up in premium, whether it's a mitigation block, whether it's an order block, a fair value gap, there's all this choppiness. So let's introduce the bond auction protocol to show how we can get more clarity in days where there's a 101 bond auction news event. And it's simply this: we're going to move the lunch hour. Instead of 12 to 1, we're moving it to 11 to 12. And what that does for us is it gives more clarity on what type of profile would be at play here. So moving this lunch hour does a few things for us that we have to change our framing. First of all, our AM low is now here, not here. Our AM high is the same one. We know we have a down close, and by putting the AM low in the right place, we can see which one of these profiles is now more in play. So we had, let's do the same process of elimination. Looking at this profile here, that AM low should stay defended. Again, now just using this as our lunch macro, our AM low should be defended. We should be an upswing. We should see an upswing coming off of the AM low. The lunch low would get attacked and we would consolidate around 9:30. Well, the fact that the AM low, which is now this swing low, was taken means this portfolio is out. Similarly, for a 2-session down close, the AM low should be protected. Maybe a slight touch with a wick, but we shouldn't see any activity below the AM low. Again, because we're looking at this AM as being truncated because of the 101 bond auction, our AM session is now truncated and our lunch macro moves up. So because the AM low was taken, this profile is out as well. So these two profiles are out, which leaves us with only one option. So our process of elimination has guided us to see that there is one profile that is more probable than the rest. And so in this situation, what we're looking for is activity below the AM low that will either give an SMT or will dip into a 15 or 60 minute PD array. So let's see if we see any of that before we jump down onto the 1 minute and then we move over to the silver bullet. So we're looking for a 15 minute. Sorry for all the jumping. So we're looking for a 15-minute array. And this was a previous journal entry, so let's just hide all of that. We're looking for a 15-minute PD array back in time where this price action is working. And we can see that we do have an order block here. So right below this sell side, we have all of these consecutive down close candles. Price works through the entire set until it gets to the very last one, the body of the very last one, which is here. Okay, so that is simply building the narrative for the profile. Let's go up to the 60-minute. You can see something similar. That order block on the 1 hour is a lot clearer. Goes all the way down but does not close below the wick of that order block. We can see a fair value gap back in the past, but we're really looking for a 1 hour PD array, and so that order block is where price gets defended. And you can see on the same candle, price breaks back above the high of the PD array of that order block, and so that's a confluence or a help with the narrative. Let's go back to the 5-minute. So here's our framing. We're seeing that price dips down into that order block in our redefined lunch hour. We're looking for price to then, once taking that low, to push higher. So we know we see that here, and time of day is going to define whether or not, and this is about 3 p.m. in terms of the profile timing. So time of day will tell us that about 3 p.m. we may or may not get back to the highs, but around 3 or 3 p.m. we could either be making a two-stage move where we take some internal sell side and push higher, or we could reverse to go lower. So let's just mark out 3 p.m. is, we'll just hold on to that information for now. So we are framing our day to say, okay, I need something, and I'm using the profiles to help me determine where is price going to next. So I can see that I've got the body of my order block on a 15-minute, I've got the top of my order block on the 1 hour and the 15-minute here. So if price were to continue above that, that would be an order block that was revisited, and price is now going to move away. So within that lunch macro, we see the AM low taken, just like we're expecting in the profile. And again, these are rudimentary diagrams. You're looking for the liquidity movement, the price action movement, and you're using the profiles to help dictate when, the time. And the journal entry for today is talking about a bond auction protocol where we shift the lunch hour from 12 to 1 to 11 to 12. So with that being said, we can see here we've got high, low, price shifts. We're looking for price to revisit some PD array, so make a note of here. And we can see that after price takes the AM low in the profile, we're anticipating a bullish run until at least about 3 o'clock, where at 3 o'clock price could go either way. Make a sell side sweep and push higher, or simply retrace back into that leg, respecting something on the AM down session, down close side. So we're still mindful of these arrays, and we're going to do an exercise for the journal on what those arrays did on the other side of the curve. But effectively, what this is triggering is a market maker buy, and it could be a market maker buy in a buy program or a market maker buy in a sell program. It doesn't matter, but the intention here is seeing sell side sweeps, market structure shifts, retraces to discount, and then continuous movement out to show that the profile has been confirmed for the PM session. So we haven't even gotten to any sort of setup, because the action for us in this journal entry is this PM Silver Bullet. There's a ton of different mechanisms that can be used here, and I'll touch on a few, but the intention is, now that we have the profile helping us to say what direction do we want to be taking any of our trades. Now it almost doesn't matter what trade you take, so long as you are in that direction. You can learn something more from it and maybe be a little less frustrated. And all of this is supported because of the bond auction protocol. So let's jump over to the Silver Bullet. We are anticipating price to be continuing bullish until about 3 o'clock, which is here, the end of the Silver Bullet. So what areas do we have to reach for? We have the order block to reach for by 3 p.m. We have the fair value gap to reach for, number one. We have the fair value gap to reach for here. This wick creates this area as a very interesting fair value gap to either be protected or to close entirely. We've got the 930 open, and we've got the AM high. Now we know the profile is saying you probably won't get to the AM high. You might get to the 9:30 open, but depending on time of day. So let's jump into it. Let's go down to the 1 minute. And let's go to our silver bullet. And here in the silver bullet, it is nice and easy to see exactly what you're looking for. So you're looking for any discount array or fair value gap or order block, any of your bullish arrays to enter on within this 2 p.m. time frame. We've already seen price clear into an order block. You see that market structure shift. We can see right away we've got this breaker. All that activity gets confirmed and confirmed and confirmed. We're pushing up, up, up. So we're looking for previous highs where price will give us another range to work off of. So once that buy side is taken, we're zooming in on our silver bullet and we're looking at the leg that took the buy side. You can see the price action is continuously bullish. So this leg is now our leg that we want to trade in. We want to stay below the 50%. We can see below the 50%. We have our order block. That could be entry number 1. We can also see within this price action leg here, once price clears this leg, come back down to the high of that range. We have another entry there. And again, because we're anticipating price to peak at 3 o'clock, we don't know what direction it's going to go. We can start to scale off when we reach any of the previous arrays on the sell side of that curve. So here would be your silver bullet entry. You're seeing this price leg, excuse me, clear that buy side with a lot of good momentum. So you're looking for a retrace down into the 50%. You get your order block entry there. You could look at this as well, clearing this intermediate buy side, retracing down into either one of these, whether you're looking at your balanced price range here, whether you're looking at an order block of this, see all these consecutive candles, consecutive candles breaking above this high. It's an intermediate high, which is considered, that's where you get your market structure shift. You're looking for down close candle. So within this micro price action, confirmed when price breaks above this buy side, which was all but confirmed to be a reversal pattern because of shifting the lunch using the bond auction protocol. So with that knowledge, wherever you choose to enter, I'm electing to use the silver bullet timing to be very specific about when I'm going to be at the chart. You can use that information to help you with your trade. And because the profile suggests a 3 p.m. peak, then you're looking at 3 p.m. to start scaling out, or to be very mindful when you see these consolidations. You're very mindful that price will very likely take sell side, and if it were to go higher, it would need to be taking sell side, then making a shift, then retracing. So for example, here we are waiting for some form of sell side to be taken. So sell side under here, sell side under here. The sell side take is only part 1. You then need to see some market structure shift in your favor in terms of this being bullish. Otherwise, you'll be worried about it being bearish. You can see your market structure shift comes through here. And so now you're looking for anything in this leg that would support a narrative for a bullish move. Take your pick. There's several things you could use in this. And then price makes one more stab. You're looking for price to run the high that created the move. So this is the bullish stair step kind of effect. So it comes onto a discount array, doesn't go below the sell side, that swept the move, price runs up. So in a picture like this, for example, when there are no fair value gaps validating order blocks. So when you take this range, the whole PD array matrix is built off of ranges, right? So when you take that range and you're looking below the 50%, which is anything in here, because there are no fair value gaps validating any of the order blocks that are in the discount of the range, you want to be thinking about the rejection block. So it is a fair value gap here because it shifted in terms of change in the state of delivery. But because there's no fair value gaps in here validating that down close candle, for me, I always go directly to the rejection block. If I see a shift, but I don't see a fair value gap, I immediately think of rejection block plays, which are bottom of the wicks, below the bodies. So when price shifted here, this run up, even though it wasn't consecutive, it definitely shifted above price. Did it twice. It does come down to the 50% here, but you'll notice in terms of just classic PD arrays on the PD array matrix, old lows going up to rejection, old lows going up to rejection blocks, going up to order blocks or fair value gaps or mitigations or breakers. You don't have that cleanly here. The reason why this wouldn't be considered a breaker, just the formation, the anatomy of this candle is not one that would suggest that it's a breaker play. Mind you, it still works because price then gets to the buy side liquidity target, but to be more refined, you're looking at this leg that shifts and you're dissecting the discount array in this leg, so it's only anything below 50%. And what we can see is that there's no fair value gaps validating an order block, and so immediately my eye goes to the rejection block that gets filled at 352, and then you'd only be mainly looking to get above this buy side liquidity, hoping for more, but you'd see that would give you a decent run. Like you'd at least get 5 handles off of that. So the buy side gets you to 8, and then this fair value gap gets you to 11. And so bond auction protocol, sorry, got sidetracked there. Bond auction protocol is all about looking at when that bond auction time is, and if it's at 101, you're moving the lunch macro ahead 1 hour, and then using your process of elimination based on the AM range, what happened in that AM range, where's the high and low, and you're looking at the 3 different down close, AM down close profiles, running your process of elimination, and then waiting to act in that PM Silver Bullet. And yeah, that's it. So yeah, we'll do it again.